central banks all around the world, the only precious metal reserve that they hold, and they've been adding on a lot to it, of course, in the last 3 years, is gold. But there is some proof, small proof, albeit, that a major central bank in the Middle East is starting to acquire silver. And I think that could be explosive, not just for the price, but just for the whole precious metals market. Russia's central bank may be boosting silver prices through undeclared purchases. Silver prices may be benefiting from undeclared but substantial buying by Russia's central bank.
Central banks have long focused on gold, sharply increasing their reserves in recent years. However, a new trend may be emerging as Russia and possibly a major Middle Eastern central bank have begun adding silver to their holdings. Though limited, this shift towards silver signals a potential change in global reserve strategy and could help support silver prices. Mario Innecco, a seasoned market analyst and former City of London bond trader, notes that silver has reached its highest weekly close of the year at nearly $39, marking a 14-year high. A breakout above $39.50 could trigger strong buying momentum, coming at a time when central bank interest in silver is rising. Now there are signs that silver may be entering the picture. Analysts argue that if the global financial system returns to a system of absolute money reserves, silver could complement gold by providing greater liquidity for both economies and financial markets. Russia has already added silver and platinum to its reserves, while Saudi Arabia recently purchased over $30 million worth of SLV shares. These moves suggest that silver may be emerging alongside gold as a reserve asset, with potential for other major economies, such as China and India, to follow, thereby boosting both its monetary and industrial importance. This growing interest from major central banks suggests silver may no longer remain in gold's shadow. Up next, we'll share clips from Mario Innecco's interview. But before we dive in, don't forget to subscribe to our channel and hit the bell icon so you never miss an update. Thank you and enjoy the video.
Central banks all around the world, the only precious metal reserve that they hold, and they've been adding on a lot to it, of course, in the last 3 years, is gold. But there is some proof, small proof, albeit, that a major central bank in the Middle East is starting to acquire silver. And I think that could be explosive, not just for the price, but just for the whole precious metals market. And I think it makes sense, because if the world has to go back to having some kind of real money reserves, and I think that's becoming more and more clear, especially vis-a-vis the BRICS, but also vis-a-vis the US. There's a lot of talk of revaluation using gold as a reserve asset. It makes sense that they also use silver. It will provide more liquidity for not just the financial system, but for the economies. I think it's a no-brainer. Yes, silver is going to continue to be a very important industrial material or metal. But yeah, and that's what could drive the price a lot higher, the fact that central banks are going to start looking at silver. Russia's central bank may be boosting silver prices through undeclared purchases. Silver prices may be benefiting from undeclared but substantial buying by Russia's central bank, according to journalist Tim Treadgold. That's a good name, Treadgold. Silver is moving out of a long shadow cast by gold, its precious metal sister. Treadgold, I think it's more like a big brother gold, really, wrote in a Forbes article on Tuesday evening, with hints of a major new buyer, Russia's central bank, starting to influence the silver price, which has risen to 14-year highs. Yes, and yesterday, August 22nd, we closed at a 14-year weekly closing high. So yeah, they announced this in September last year. As you can see here, it plans to add silver to its state reserve fund for the first time.
Mario Innecco highlights that strength in precious metals extends beyond gold and silver, with mining stocks like GDX also showing momentum. He points to Michael Oliver's research, which suggests the S&P 500's rally may be weakening despite record highs, as RSI signals fade. Gold, meanwhile, is forming a bullish pennant near $3,400, and combined with a weakening dollar, this setup could trigger a major breakout in precious metals as capital rotates away from equities. At the same time, central bank activity adds weight to the trend. Saudi Arabia recently purchased nearly 1 million SLV shares, about 32 tons of silver, while Russia has already begun stockpiling silver and platinum. These moves may mark the early stages of a broader shift that other major economies, such as China or India, could join. Meanwhile, Jerome Powell has paved the way for a September rate cut, which is expected to boost metals and equities in the short term. However, analysts warn that the stock market's gains may be unsustainable. Let's get back to the interview.
I'm not saying here that all central banks now are going to start loading up on silver and that silver is going to go through the moon. But I think it's very interesting because Russia, as you know, is part of BRICS. Saudi Arabia is kind of on the fence. They are posted as being members of BRICS, but officially they're still kind of trying not to alienate the Americans. But I think this is a new trend, and I wouldn't be surprised to see also the Chinese and other banks, central banks, maybe even India, starting to buy silver. So why SLV? I mean, you might wonder, can they take delivery? Well, I had a look at that. I had a look at the rules, where I actually went on ChatGPT. I could have gone on the SLV prospectus, but this is what I found from ChatGPT about the SLV. SLV, it says, if you're retail investors, you cannot directly redeem those shares for physical silver bars. It's only authorized participants, only large institutional players, typically banks and market makers, designated as authorized participants, can create or redeem SLV shares directly with the trust. So the limit, you have to do at least 50,000 shares. Well, the Saudis bought 930,000, I think, shares, and they bought 30 million worth of SLV. That's just under a million ounces of silver, which is basically, I think, let's do the maths here. Get my calculator out. Well, that's like 32 tons of silver. It isn't that much, 32,000 kilos that the Saudis bought, but we need to keep an eye on this. That's very interesting. And we're going to look at some charts in a minute, but I want to talk about Jay Powell. It looks like he's folded under pressure from President Trump to cut rates. He came out yesterday and at Jackson Hole, and he said that they're ready to cut. He paved the way for a rate cut in September. And the markets reacted very positively, not just gold and silver and the miners, but also the stock market. But I still think that the stock market is kind of topping, despite the fact that, I think the S&P closed at an all-time weekly or all-time high yesterday, and we could still make new highs.
Silver's ascent indicates a possible shift in global reserve strategies to a 14-year high, as well as the increased interest of Saudi Arabian and Russian central banks. Silver may become a crucial addition to gold, enhancing its function as a monetary and industrial asset if additional significant economies follow suit. With the US dollar displaying weakness and gold creating a bullish setup, precious metals might be poised for a significant breakout, particularly as monetary policy changes and central bank measures coincide to favor them. If more central banks start purchasing silver, could it really become a long-term reserve asset alongside gold? How might the move of capital into precious metals like gold and silver be accelerated by a declining value of the US dollar? Share your thoughts in the comments section below. If you find this video informative, please consider supporting us and turning on notifications to stay updated about our latest videos. See you in the following video. Thanks for watching.